Hi, are you self-employed or maybe own a small business? Did you know that with a SEP IRA, you can save up to $70,000 in retirement funds this year? Please stay tuned after this quick disclaimer as we go over what SEP IRAs are and who they're for and how they can benefit you. Okay, so first, what is a SEP IRA? So, for a definition, a simplified employee pension or SEP IRA is a retirement account designed for self employed individuals, freelancers, and small business owners. A key characteristic of this is that the employer makes the contribution, not the employee. So it works similarly to a traditional IRA in that it's pre-tax, but with significantly higher contribution limits. Two, who is eligible? So self-employed individuals, freelancers, consultants, gig workers, sole proprietors, partnerships, LLCs, S corps, employers of any size can set up a SEP, but it's especially attractive to small business owners with few or even no employees. There's no complex paperwork, no annual filings required, and it's easy to set up and manage. 3, 2025 contribution limits and rules. So the contribution limit is up to 25% of the employee's compensation or $70,000, whatever's less. And that's for 2025. It does tend to go up each year, which is very cool. Contributions have to be the same percentage of compensation for all eligible employees, including yourself, across the board. So if you decide to do 25% of compensation, you have to give everybody that same 25% of their compensation. There's no catch-up contributions, unlike traditional or Roth IRAs, but contributions are tax deductible for the business. Now, if an employee wants to put away some of their own funds so they can get a tax write-off, they can always open up a traditional IRA and contribute to that themselves. 4, when and how to contribute. So contributions can be made up to your tax filing deadline plus extensions. So for 2025, taxes, you can contribute up until October 15th, 2026, if you had filed an extension back at tax time. Remember, only the employer makes the contributions. 5, SEP IRA versus traditional IRA. What is the difference? So a traditional IRA has a lower annual contribution limit it's $7,000 in 2025 with a $1,000 catch-up contribution if you're over 50. So if you're over 50, you can put in up to $8,000 of your compensation. And the individual funds it, so they get the tax write-off. A SEP IRA has higher limits, but it is employer funded only. A SEP IRA uses the same tax rules for withdrawals as a traditional IRA because it is a pre-tax account, which means that you pay the taxes now and that you get the tax write-off now, and then you pay the taxes later on in retirement as normal income. So say I put in money into my traditional IRA right now, or my company puts in compensation into the SEP IRA, we get the tax write-offs now. But then in retirement, when I take a distribution, at that point, I would get a 1099. I would add that to my regular income and do my taxes as normal. So for instance, if I took $1,000 out of my SEP or my traditional today, In January, I would get a 1099 for $1,000 saying I took out a distribution, and I would simply add that to my taxes when I did my income, and then I would do my taxes as normal. So it is taxed as regular income in retirement. 6, what can you invest in? So anything allowed in a traditional IRA, including alternative assets, if you have a self-directed IRA, can be invested in. So alternative assets include things like real estate, private lending or promissory notes, tax liens, private placements, startup equity, precious metals, cryptocurrency, and so much more. The IRS doesn't really tell you what you can invest in, but they do tell you what you can't invest in and what a prohibited transaction is that you absolutely can't do. So, kind of like a bad parent, they tell you what you can't do, but they don't tell you what you're supposed to do. So, if you contact us with an idea for an investment, we can tell you if that's a prohibited transaction, if it's allowed in your IRA, or send you to get more guidance from an ERISA compliant lawyer who understands what those rules are. So remember, self-directed IRAs give you full control beyond stocks, bonds, mutual funds, CDs, things like that. But you have the responsibility of picking your own investment. Okay. 7, rules to be aware of. You must contribute the same percentage to all eligible employees in your SEP plan. Eligible employees are those who are 21 or older, earn at least $750 in 2025, have worked for you at least 3 of the last 5 years, and all of those people are eligible if they're your employee. So let's talk about early withdrawals. Early withdrawals, just like any other pre-tax IRA, are before age 59 and a half, and they are subject to a 10% penalty. And that's on top of the taxes that you pay when you take a distribution. So keep that in mind. The IRS wants you to keep that in there and grow that as long as possible because that is for your retirement. So if you take an early withdrawal without an exception, then you are going to pay that 10% penalty. And that works the same way for SEPs and traditional and other pre-tax accounts. So also, because it's a pre-tax account, RMDs or required minimum distributions do begin at age 73. In a few years, that'll be changing to 75, but that's a few years down the road. So if you are approaching retirement age, remember at age 73, you must begin taking required minimum distributions. 8, okay, is a SEP IRA right for you? Well, a SEP IRA is kind of pretty much an ideal case for sole proprietors and side hustlers who may have fluctuating income because you are not required to contribute to your SEP every year. So if you have a year where you just really can't make that contribution, you don't have to. And then if you have a really good year and you need to save some taxes from your business, that is a good year to just max that puppy out. Small business owners wanting a low maintenance retirement plan, this is also a pretty good plan for you because it is much lower maintenance than, say, a 401k. Also, entrepreneurs, side hustlers, people who are looking for big tax deductions, this is good for you. Now, it's not ideal for if you want employee deferrals or catch-up contributions. It can be combined with other plans in some situations. So like we talked about before, if you have a SEP and your employer offers a SEP, but you would like to get a tax write-off as well, you do have the ability to contribute to a traditional IRA. Finally, just to recap, SEP IRAs are powerful, flexible, and tax advantaged for the self-employed and small business owners. If you're a small business owner or a freelancer, a SEP IRA could help you grow retirement savings faster while cutting your tax bill. But make sure you follow the rules and explore all your investment options. If you have questions, you can call us at 866-377-3311, or you can schedule a free consultation today to get started. The link is in the description below. And don't forget to subscribe for more self-directed IRA tips, updates, and financial tools from Mountain West IRA. Thank you.